Good afternoon. This is Dwayne. Today is Tuesday, the 9th day of April 2013. It is 11:25 a.m. Pacific time. We're at the end of the radio show today, and I've asked the audience to find a market that we might trade. And the market they brought was the yen. They brought a couple. We looked at a couple. Some were setups. Some of the guys in the audience said they would have traded them. Anyway, we're gonna take a look at the yen here. Let's just get a little trend line going. Okay, what do we have? We have bearish divergence. The cycle is red and laying flat across the bottom. The green line here, part of the slingshot, it's up at the top. So that's bearish divergence. We have a bearish cross, and as we can see, as we got that bearish cross, price has continued to fall and pull back and fall and pull back and fall, and now it's pulling back yet again. Okay. Now it's already bounced off the BBC a couple times, and so it's going to take, this is probably going to require two candles. We would need a down close followed by another down close to get me below this trend line. I don't know how many of you hung around yesterday for that ES trade, but that thing took an hour and 14 minutes for it to finally go the full 2 points. But I left the trade on and I recorded the video, and I'll get it posted on the blog tonight. Spoiler alert to anybody that hasn't watched all, let's see, 74 grueling minutes of it. Yeah, sorry. Sorry to spoil that for you. Boy, all these headset, I gotta figure out a better way to do this. Well, once I get the new mic hooked up, oh, then that's gonna create its own unique problem. Oh well, I'll worry about that when it happens. Alright, here's what needs to happen. We need to get a down close. Now the high of this candle right now is 10.081. Let's bring up a DOM. Kind of like taking your shoes off so you can count your toes. So if the high is 10.81, 10.081, that's the high, 10.081, and if you go 1, 2, 3, 4. That means if you get a down close, it's going to close at 10.077. The next candle will open at 10.076. However, 076 I don't think will get us below the trend line. So that's why I said we would need two candles. We would need two consecutive down closes to get below that trend line. So we'll see. We'll see what happens. We'll keep an eye on it. Zeus says if the cycle stays red, I don't need a trend line. Dan says, why do we need it to close below the trend line when the trend line is still red and the price hit the BBC? Well, I'm going to tell you. Now, Michael may do it a little differently, but see, we've already hit the BBC. See, that bearish cross, and then the first pull back to the BBC. That pull back to the BBC, it's done. It's a done deal. That energy you get out of that first pullback, the cross, and then the first pullback, that's kind of done. Now, this may very well be a situation where Michael will go ahead and just trade it. He might just trade the pullback right here. And I suppose one could do that. Is that what you're saying, Dan? Is that you would just sell it right here at the BBC without anything? Zeus, is that what you guys are telling me that you would do? You would just sell it right here on the pullback? Yeah. See, this thing's already pulled back once, twice. This time it couldn't quite pull all the way back. See, there's already 3 pullbacks. I need more confirmation at this point than just another pullback. So if that runs afoul of the written rules, then I'm erring on the side of caution. Yeah, I just drew a trend line right here across these bottoms. I'm not really in, because from here, now granted from here to here, there's actually a little room to run. By the time you get below this trend line here, you don't have a long way to go to the low of the day and the previous swing low. But that's okay. If it's heading down, it's heading down. Mm-hmm. Guys, I'm going to pause this for just a moment and I'll be right back. Okay, we're back. Sounds of silence there for a moment. I can see that absolutely nothing happened in my absence. So, anyway, I'm not going to trade this off just to pull back to the VBC, guys. Let's see what we got in the chat room over here. Do you know any reason why on my 6J M3 price has not touched the BBC? Well, Alan, here's the thing. We each started our computer at different times. See, on a time chart, if we were both running like a 5-minute chart or an hourly chart, then our charts would match up perfectly. But because whenever I start my computer and start this particular chart, that's when it starts crunching data. And it's going to crunch, crunch, crunch until it's time to create a new candle based on the 4 ticks. And so yours, you just simply started your computer at a different time than mine. That's the quick answer. Okay, let's see what we got here. S&P Cash is retesting the all-time intraday high of 1573.66 of April 2nd, and just retouched the S&P futures top of 1568. Is this an important double top resistance, or do we break through and have a new important support level? Time will tell. Well, you know, Steve, I had a chart up on, it's up on the blog. It's still out there. I'll probably repost it tonight because of today's action, and that will, it's important. What's more important than the double top is the triple top. It's the biggest, nastiest, ugliest triple top in the history of the markets. In fact, I believe that is the title of the blog post. Let's go have a quick look. CFRN. Yeah. Maybe we'll have a look, and maybe we won't. There we go. That's because I got the recorder and everything else running. Come on, you can do it. I want to watch this trade too. It's not going anywhere. Okay, here's the blog, but you got to go. It's got to be patient. Let it load. It's going to take it a minute. Anything else setting up, guys? I'll go look at that. We aren't committed to this trade yet. Alan, did that answer your question? Okay, this thing finally loaded. So now what you need to do is you need to be on the, click the navigation pane up here where it says E-mini radio blog. Now we get to wait for that page to load. Oh dear me. I got a lot of horsepower under the hood on this computer, but apparently I could use more. Okay. So I'm at the table of contents, go to find, and then type in triple top right there. The biggest triple top in trading history. See that? Okay. Now we wait for that to load. Right here, S&P triple top. 99, 07, 08, and now. triple top. Now this post talks about triple tops. It talks about how bearish it is. It talks about the biggest triple top in the history of Wall Street. It's a big deal. It really is. And could it be the, you know, I'm not a doomsday end of the world guy, but in the grand scheme of things, this is huge. Biggest triple top in history that I can find. So and so where did that put the ES? Okay, the ES got a little bit closer to the weekly zone. See, that makes more sense. Okay, so far the swing high is now 68. So now we've come within 4 ticks of the weekly zone. I mean, price should work its way up to the zone, but we'll just have to wait and see. Again, zones are an area. Like here on the way down, I mean, it punched through it a little bit. Over here, it punched up. But as you can see, the zone was the fulcrum. Up, down, whoosh, up to the next zone. So zone to zone to zone. That's the way it goes. That's just the market. Okay, Alan, I'm glad. That's something to remember, guys. Anytime you're using volume charts, tick charts, range charts, they may not match the chart you see on our screen. If we're showing a time-based chart, hourly, 1 minute, daily, it should be identical, because it has nothing to do with when your computer started and began crunching the data. It has to do with the clock hanging on the wall. Alright, let's go back to the 6J. We still don't have anything to trade here. Is there anything else setting up, guys? I mean, I've got to. I don't mind waiting, but it's going to take us. This candle's got to close, but that's the thing with a range chart. I mean, it could take an hour for this candle to close, and then the next candle might take 1 minute if price starts to move. Okay, well, after the trading room and the radio show, yeah, I wish I could be more talkative right now. You know, tell you some funny jokes. You know, I could play music. Oh, but if I play music over there, radio guys can hear it, but podcast guys, I mean, trading video guys can't hear the music, but radio guys can. Well, need to do something for the radio guys. I started to play this earlier when David brought it up. He said something about raining down. Good song. Maybe it's not the song I thought it was. It's a Christian song, Rain Down. Yeah, that's not the version I thought. So I'm not going to play it for anybody. Zeus said goal set up, and I didn't see it. Now Zeus said never mind. Okay. Okay, see, we got to close right at the trend line. Okay, right at it. Cycle, blue starting to hook up. I mean, the fact that this is blue, I'll still trade it if it's blue. I just want to see a down close here. I want some conviction. I want to know that we've at least got a shot at taking out this swing low. Because if we get into a trade, this will be the immediate obstacle to the trade right here, low of the day. Alright, see, this has actually got some movement. So the high is 77. Oh, look at that. Okay, I'm trying to get filled at 73. We're at 72. I don't know if I'm going to get filled or not. If I don't. Now, remember, we waited all that time for this candle, and then this candle just went by like that. Like lightning. Alright. So our stop loss is at 10.081. We got triggered in at 10.073. We have two ticks in the trade so far. I sold it, so down here I got to buy them back. Let's get out in front of this thing a little bit. Alright, so right now we're at 10.062. We'll adjust that in a moment. I just want to watch this, and I want to watch my entry. Entry 10.073. Stop loss 10.081. Eight-tick stop loss. Now that stop was placed automatically by the DOM, part of the bracket. No target on the yen because sometimes it can run as it started to do right there. In this case, it was abruptly halted, but let's go ahead and just look at the obstacle to our trade. See, we said this before we even got into the trade. We said right there, the low of the day, the previous swing low, that is the obstacle to our trade. We've got to close below this 10.070 right here. Okay, if we can get below that, then it's kind of wide open spaces down below us, and we can certainly take a few ticks out of the trade. My main goal will be to get my stop to break even plus a tick. If price heads back down and can take out this swing low, once that swing low is taken out, my goal will be to get my stop loss to break even plus one tick, because that one tick covers the commission on the trade. So even if price ultimately comes back to stop us out, it's been a free look at the market. Now all we can do is be patient and wait. Oh, Zeus says that's not the low of the day. Thanks for pointing that out, Zeus. See, that's the thing with a 4-tick range chart. Sometimes you get a little bit of tunnel vision. You should always have a larger time frame chart for any market you're trading. But see, I've got you guys as eyes helping me out. So while it's a previous swing low right here, as Zeus just pointed out, it is not low of the day. What is low of the day, Zeus? Is that the low of the day? Or is that the low of the day? Well, are you going into last night? 10.070. If that's not the low of the day, it's awful close. 10.037? What was that, yesterday afternoon? Oh, right here. Oh, that's 10.053. Oh, well, I won't worry about it right now. But thanks for pointing out that it wasn't the low of the day. Okay, so, however, price is acting as though it were the low of the day. See, it's come right back up here to test this BBC again. Okay, we've got our hard stop in. Price testing the BBC. This is going to be a deciding factor right here. We need to get a close back below the black line, and then we need to get a close back below this area right here, 10.070. Cycle is blue, starting to point up. Our green line here is going sideways on us. All we can do is be patient here and wait. because we've not had a chance to move our stop down to break even plus a tick. We need the trade to actually go in our favor first. It did initially move a few ticks in our favor and quickly reversed. Yeah, I agree with you, William. The divergence aspect of this does not look good for this trade. We're in the trade. Now, if you were in the trade, and it might be part of your plan, hey, I'm in the trade and things don't look good, I'm going to scratch out with 4 ticks. There's no law that says you have to take the full 8 ticks. The law is you got to do whatever is in your trading plan. Okay. If your trading plan says you take the full hit, you take the full hit. If the trading plan says that based on whatever, and William just pointed out that divergence, you know, is starting to look like we're heading north instead of south, can you scratch out with a 4-tick loss instead of taking the full 8 ticks? Yeah. Mike Reed does that all the time. No, Iris, it's, oh, well, we don't have 4 ticks profit in the trade. We're down 4 ticks. So, yeah, we'd be taking a 4-tick loss. Right. But you are correct. There's a double bottom here. I see what you're saying is you would just go ahead and take that 4-tick loss because we're trading against a double bottom. No, that's very well said. I'm talking into 2 microphones now, the live radio microphone and the trading video microphone. So guys, if you're listening, anybody that's listening to this trade video after the fact, if I forget to say goodbye or close it out in the proper way, whatever that is, then understand it's because I'm taking a trade in a live market while I'm doing the radio show, and I'm not the sharpest tool in the shed. So I'm running at 100% right here. This is all I got, and I'm tired on top of that. What is the benefit of a trading plan and staying in a trade that is showing indications of turning negative? Well, we'll just watch, Alan, and I think you might just see your own question answered here. Alan says, what's the benefit of a trading plan and staying in a trade that is showing indications of turning negative? Well, if you read the book, Trading in the Zone, there's an argument that says once you accept the risk of any given trade setup, that you have done that you accept the risk. William says, how do we know you're not the sharpest tool in the shed? That's a good question. I guess you just have to take my word for it. That's good. Does accepting the risk mean do or die? Alan, have you read the book Trading in the Zone yet? It's recommended reading for every CFRN partner. Okay, go back and read that part again about accepting the risk. Now, just because Mark Douglas in his book says that's how he does it, doesn't mean that's how Bob says get a smaller shed. Or just kick all the other tools out. So yeah, Alan, go back and read that part about risk again. Okay, Mark's take is that once he accepts the risk, he's going to be in it do or die. What I'm saying is you don't have to do that. You can write your trading plan differently. Your trading plan could say, when such and such happens, or the trade looks like it's going against me, I will try to minimize my loss and get out of the trade. Write that into your plan if that's how you're going to trade. Because the key is to have a plan and to always trade according to your plan. This way, over a large enough sample size in a given period of time, you're able to determine what actually works and doesn't work. If you change your swing every time you step up to bat, you're never going to know for sure what really works. And what works for one guy may not work for you. And so you got to determine what your rules are going to be. And that's why it's so important when you write your business plan and write your trading plan, you give it a lot of thought, you take plenty of time, because you're going to live by that thing. You're going to trade by that thing. Don't put something in there that you can't live up to or aren't willing to live up to. So we've had more than ample opportunity to scratch out of this at less than our hard stop loss, which is 8 ticks. The market has literally begged us to get out at a 3, scratch out at a 3 tick loss. Couple ticks. For training purposes, we're going to remain in this trade until one of two things happens. We either get stopped out or I'm able to get my stop to break even plus a tick. One or the two. I don't make any promises beyond that. One of those two will happen. Now I want you to notice here. See how we came down. Now Iris pointed out double bottom here. Now look at, see how this is just starting to curve up? I can't draw a curved line on this screen. Can you see it with your mind's eye? I'll put it this way. At this point, I'd be very surprised if this candle does not close above the BBC, which then drags the black line into the green line, and that's definitely a time to, if you've given yourself the liberty in your trading plan of scratching out, it's really a good time when that happens. Because once we go back above here, once price closes back above the BBC, then the high probability part of this trade it's gone. Alright, we're down 5 ticks, 3 more ticks, we're out of this thing. Our entry was 10.073. Our stop loss, which was automatically placed 8 ticks behind us by the DOM, part of our bracket order, 10.081. We're honoring that stop. We're staying in the trade. We've talked about the reasons why one might scratch out of the trade. And if you're in the process of writing your trading plan, give that some thought. Okay? Go out and don't just make something up, but go look at historical charts. Figure out some percentages. Look at how many times it would go in your favor, how many times it didn't go in your favor. Walk through the chart bar by bar by bar and really do an analysis so that when you say, okay, this is it, this is my plan, this is my best work, you're done, you're finished. You don't ever have to strive to be a great trader again. Now all you have to do is become excellent at following your plan. And if you're excellent at following even a mediocre plan, your chances are, pretty good. Certainly a lot better than the guy who has no plan. Thank you very much, Alan. That's very kind of you. Do you have a time when you won't take any more trades? 3 or 4 or 2:30? Not well. There was a time, Scott, like when I would go to the office and then come home. But now that my studio and trading desk, my trading desk is inside of my studio, and I moved my studio into the house upstairs, overlooking America's largest amusement park, or not amusement park, but a city park. I take trades, anytime I see something setting up. And over the last couple of years, the markets have become more and more a global type of market. I know that in the afternoons it's going to slow way down. And the early evening in the Asian session, it's going to be slow, and then it's going to pick up around the London Open. So with all those things taken into consideration, everything that we do still plays out in the slower market. It just takes it longer to happen. So I don't personally have a hard and fast rule of I don't take a trade after a specific time. But you could, and you could certainly write that into your plan. And I know that many people do. Many people won't take a trade 15 minutes before the close or 30 minutes before the close. Some people won't trade the first 30 minutes after the opening bell. And some people only trade the first 30 minutes after the opening bell. Okay, here we said our entry was 10.073. We're down 3 ticks at 10.076. Our stop loss is up at 10.081. Price has pulled all the way back up to the BBC now for, since we got into this trade a second time. Okay. Still, we've had plenty of opportunity to scratch out of this thing with a 3-tick loss. 5 ticks less than our hard stop. But for the purpose of this video, we're just going to let it sit. Scott says, just heard on the wire that North Korea has told everyone to evacuate the lower peninsula in preparation for thermonuclear war. Dear Lord. God, let's pray. Father, we come to you right now in prayer, and we ask that your hand be upon all of those in South Korea. Touch the mind of this man who's not thinking clearly and thinking straight. Perhaps he would change his mind, or maybe his gun just doesn't go off. But spare the lives of the innocent. In Jesus' name, amen. All right, here we go. Coming up, we should testing this thing again. Now after that test, we got a little double top here at the BBC. And now we could scratch out with a 2-tick loss. Francis says that news could affect your trade. It could, Francis. That's very true. It could. Let's see if it's affecting the S&P at all. S&P has found its way up to the zone. We hit it to the tick on this candle right here. 1569. So we'll see what comes next. If this were to happen, this thing that we just read, this headline, how that would impact the yen, positively, negatively, honestly, I don't know. You could probably argue both sides. I do know this trade's starting to feel like more like an investment than a trade. Yeah, you're right, William. You could argue both sides of that and still lose. Yeah. All right, I'm going to go ahead and close out the radio show, guys, so I can get one of these headsets off. Now, so those of you who are listening to the video after the fact, you won't hear the music playing when the show goes off, so it'll sound a little weird to you, but hey, that's okay. All right, that's going to do it, guys. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Okay, the radio show's closed out. I'm relieved of one headset. The video is still running. We got stopped out on our trade here, minus 8 ticks. Now, this is a great opportunity for you to sit back and study. Okay, this time, you know, things were pointing that the market might go the other way, but there will be times when you shoulder the risk and it still goes on to give you, you know, your target, even though the tide is turning against you. Am I trying to sway you one way or the other? No, absolutely not. What I'm encouraging you to do is to look at both sides of the equation, because again, what you don't want to do is start trading your plan. Once you get your plan written and then the deal sealed, man, people have signed off on it, everybody's patting you on the back, dude, that's a good plan, go trade it. You don't want to be 4 days, you spent a month writing this plan and now you're 4 days into the trading it, and all of a sudden you're like, you have second thoughts. You know, I think I want to get out, or I want to stay in. It just dawned onto me, to the people who are listening to the radio live, I abruptly cut you off and I went live with the pre-recorded content. This is way too confusing. I'm going to have to rethink this. I'm going to keep doing it. I've just got to rethink how I'm going to do it. As I was saying, on the trade, we hit our hard stop, 8 ticks. I'm not trying to sway you one way or the other. You know, when things are starting to point the other way, should you get out or should you stay in? I want you to make that decision. What I don't want you to do is I don't want you to spend 30 days writing your plan. You've got people signing off on it, you know, going, dude, that's a great plan, go trade it. And then 4 days into the plan, you have a couple trades that don't do what you expected them to do. Now suddenly you're wanting to change the plan. That won't work. You can't change your plan 4 days in. It took you 30 days to write it. You spent at least 30 days in the simulator becoming consistently profitable. So that's why I say it's so important what you put into that plan, because you got to live with that. It's not just words on a page. That's how you're going to live your life. And you've got to stick to it long enough for you to figure out that it really isn't working over the long haul. Because see, it's about percentages, it's about thinking in probabilities. Again, I'm not trying to sway you to the side that says once you shoulder the risk, stick it out. I'm also not saying at the first hint the trade is not going in your direction, run for the hills. I'm not pointing it in that direction either. I'm just telling you that both of those are valid options. They're both valid options, but you can't have it both ways. You've got to pick one or the other. So think about that as you're writing your trading plan. Which way is it going to be for you? Now, you can just pick one and live with it, or you can go out and take historical charts. You can pick them apart, and when you get into a situation just like the one we were just in, look at the percentages. How many times that what you're going to find out is probably about half the time it goes one way and about half the time it goes the other way. Okay, that's probably what you're going to find out. But better for you that you go find that out yourself by looking at historical charts than to just take my word for it. Because then whichever way you decide to go, you're okay with that when trades don't work out or go in your favor. Because that's going to happen. This right here, this is the truth about trading. William, I'm not sure what you mean. Since I don't have your indicators, I must trade off the BBC until the reverse divergence sets up and then begin to look in the other direction after a setup. I'm not sure, William, what indicators are you talking about? I'm sorry, William. I thought you were a partner. You should become a partner then, because partners have access to the slingshot and all the tools. Okay. Who wouldn't? You lost me. Oh. Well, we have other options. That's not a problem. Shoot Michael an email, support@cfrn.net. Okay, we had a nice little run up here in the yen. We're printing some dynamic resistance. Hey, I'm not going to stick around for another trade. I got to go. But we might. This could turn into potentially a long trade for the yen. But I'm going to close out the webinar, guys. I'm closing everything out right here, right now. And I will see you all tomorrow. All right? Have a great evening.